Hello students, I Prabhu Sharma welcome you to the last lectures of the cash flow statement. Today I will tell you the complete sum with the help of the one numericals as per the accounting standard 3 how to prepare the cash flow statement. You have to follow the techniques now. As per the accounting standard 3 we have to prepare the cash flow statement including all the three activities, operating activities, investing activities and the financing activities. The one balance sheet will be given to you. You may see here this is the balance sheet. First current year figure, then the previous year figures are listed. And notes numbers are also given. If the notes numbers are given, you have to collect the data from there individually. As the total of the notes to account is listed here. Like the reserve and surplus, notes number 1 is there. And then the long-term borrowings is given. Now the current liabilities, third and fourth, individual items are given. And then tangible, intangibles. And then last is the inventory is also given. We have to collect the data, but I am telling you how will you have to do the figures. Shareholder funds data, generally the share capital is the part of your financing. Reserve and surplus, you have to take all the data related with the reserve and surplus to the operating. The non-current liabilities data will lead to the financing. The current liabilities data is related to the operating for dealing with the natures of current liabilities. And now the fixed assets, tangible assets will move towards the investing. Intangible assets will move towards the operating if written off. If increase, then it will move towards the investing. And then the non-current investments move towards the investing, and the current assets, all the items will move towards the operating except and the cash and cash equivalents. So these are the allocation which you have to use. You have these figures and the opening and closings are changed. The reason if it is given in the notes accounts, that means we have to take the figure from there. So I am seeing that means you have to take all the differences to the nature I have discussed with you. Now you may see here how will you have to take. Here the notes to accounts are given, reserve and surplus, like the profit is given. You have to take these profits outside the statement first. That means then the debentures are given, it will go to the financing. And the long-term borrowings are given, bank overdraft is given, it is also moving towards now the financing. Earlier it was the part of the cash equivalent, now it is moving toward the financing. Now the short-term borrowings, the moving towards, that means proposed dividend if it is given. Now you have the one figures only. That means the current year figure is added and the previous year is deducted. You don't have to take the difference from here as per the accounting standard 2013. But if you are following the 2014, that means 62,500 will be increased in operating and decreased from the financing. In the same, you have to think about that 2013 and 14 provision. Now the machinery account is needed to prepare, depreciation is needed to prepare, and now the intangible asset, if it is written off 1575 to 25, then it will move towards the operating, and then if it is increased, then it will difference will move towards the investing, and the inventory and stock will move towards operating as current items. Then the debentures date is given of the issued 31st March 2016 means the current period. That means the last period. So no interest on debentures will be charged here. But if it is the 15th, then interest on debentures adjustment will be done. So the 50,000 is increase. You may see then in 175 is given the debentures and the 50 increase. That means the question is giving you it is increase on 31st March 2016. So no interest will be charged. If you want to interest charge, that will be on the 1,75,000 is to be charged. Now the machinery account costing 40,000 is given and the depreciation on the machinery sold 20,000 and the sold machinery loss at the 5,000 is given. So how will you place all these items? First of all, you may see here, this is the solutions now. Which items will come? Here the major item is how will you calculate? I will tell you the first item is net profit before tax. How will you calculate? When you will have to calculate, you have to take the figure of the profits from the reserve and surplus first. Then if any reserve is given, general reserve etc., you may have to add here. And the second is proposed dividends will be added here of the current years. Or if it is 2014, then the previous year is to be considered as to the both side. And then the tax of the current years will be added if the balances are given. Three items, then you may derive the net profit before tax. Rest of the items are coming from the balance sheet. Goodwill written off, see the difference from the intangible asset, depreciations from the accounts, and interest on debentures are charged on the uh, previous figure. And then loss on the machinery is to be coming from the account. And then answers will be the operating profit before working capital changes. Then you have to adjust the current items of the current assets and current liabilities. Where the one item is there, only the increase in inventory. Then the answer is coming to like 56,000, that is from the generated from the operating activities. Then we have to take the investing activities, purchase of machinery and the sale of machinery. It will be disclosed by the machinery accounts. And then the purchase of non-current investments, see the difference. If it is increasing, then purchase. If it is decreasing, then sale. Then net results are derived uh, as per the minus items are more. That's why it is to be called as net cash used from the investing activity. And now the point number C. By mistake, all the A point is there. A, B, C, three letters are there. So cash flow from financing activity is there. The issue the share capitals, then from the balance sheet, and then issue of debentures 50,000 from the balance sheet, and then the dividend paid is as a part of adjustments, and bank overdraft is now the need of to consider is as invest financing. Then calculate the results now. Now the net increase in the financing, that is 104. Then make the addition of all these three items derived from the operating, investing and financing. The result is 5,000. You may see the 5,000 is a positive answer. When it is a positive answer, then it will be called as net increase in figure. Or if it is minus item, then it is to be called as net decrease. So here the results are coming. Net cash, net increase from the cash and cash inflow from the operating, investing and the financing activity. So you have to derive the answer. Sometime it may be in plus, sometime it may be in minus. So the answer is coming in the minus. So you have to put the minus bracket in the 5,000. So earlier now the opening balances will be considered. The opening means the current investment and the cash and cash equivalent items like the check. If you have these are the items to be added here. And now the 25,000 plus 26,500 is to be added. And the results will be derived with the closing balances 56,500. So I think this is the scheme now which you have to use for the first you have to derive operating activity net result, then the investing and the financing and see the result of all three activities. And then maybe positive, maybe negative. If it is positive, then answer is the net increase in net cash inflows, or the if decrease the net cash outflows, or you may write down the word increase or decrease. Then opening balance of the cash and cash equivalents will be added, and then answers will be the closing balance. You may see here the working notes, like first working note is needed to prepare net cash, net profit before tax. If after tax is given, you have to add the items like the proposed dividend, provision for taxations and the reserves. Three items are to be used here for deriving the results. And then the machinery account is prepared here. Opening and closing balances are given, and depreciations opening and closing are given, and the 20,000 of the machinery sold is given. It will be placed on the both side of the depreciation as well as to the machinery account. And the loss is also given 5,000. Then result is 15,000 or according to the cost you have to compare the 40,000 given. That means the result will be derived. Then you have to derive the missing figures of the machinery, and that is 3,55,000 with the name of machinery purchased. And now the depreciation account will be closed by putting the by profit and loss 55, that is called as the current year depreciation. So it means out of the depreciation only the 55,000 is to be added with the name of the depreciation. And from the machinery you may see the cash figures will go to the investing. Cash inflow 15,000, outflow 3,55,000, and the 5,000 is the loss will go to the operating. And depreciation accumulated from here will not go anywhere because this is already having the double entry system record. Only the profit and loss of the depreciation is called during the year will go there. So I think the scheme is there, you have to use now. Thank you. So I think these are the system which you have to apply. Thank you.